I don't think I ever really talked about this as much, but basically overheard someone talking about their business. Actually, it was like below my awareness. I didn't even know what Airbnb was. We've used it, but to be a host, I was like, you have to buy a house and do all these things. Like I was working in New York City, like I'm not buying a $2 million condo to like completely below my awareness. So my guest today is JJ King. When is someone actually better suited for just trying to figure out themselves versus hiring someone and paying the 15, 25%?
I honestly think it's like a time thing.
When you're starting, is there inventory you should try to avoid, or you just take everything in order to get started? And how does that mindset shift as you grow?
Yeah, I mean, I think it depends on like how focused you're,
What was one of the kindest things that someone did for you?
just kind of thinking right off the bat, I will say,
Welcome back to STR Like the Best. I'm your host, Michael Chang. If it's your first time listening to our show, the STR Like the Best podcast focuses on short-term rental investing, where we help you better invest your time and your money as you're looking to either get into short-term rentals or scale your short-term rental business. And our guests are successful short-term rental investors and operators. My goal is that it helps you to understand the space and make better decisions. So my guest today is JJ King. JJ, welcome to the show.
thanks for having me, Michael.
So JJ and I were in some of the same Facebook groups. A lot of short-term rental operators. It's how we get information. It's how we, get to know each other. So I think JJ and I, we've been in. When did you join the STR program?
Year and a half ago, two
Year and
years,
a half ago?
something like
Okay.
that. So yeah, I know we've kind of been running in the same circles, seeing each other around, but excited to finally get a chance to talk to you face to face.
I've been in that group since like 2018, and so it's like it's kind of cool to see like a lot of newer people that have come and like brought a new energy to the group. So it's great to have you on the show. Why don't I give you a chance to introduce yourself and your company?
Yeah, so I got my start back in 2016 in vacation rentals. So I was doing the fun world of arbitrage in New York City at the time, and in 2016, and obviously, as we all know, that has come to an end in New York City as it once was. So fast forward a couple of years, and I started my own business doing lead generation for property managers, and so I was reaching out to for rent by owner properties on Zillow and seeing if they wanted to change that long term property into a short term property. And it was working like really, really well. I ended up selling that company to another company called Ventory. They're a company that also helps property managers get more inventory, hence the name Ventory. But I worked there for a couple of years as the product owner. And while I was working there, I had a friend reach out and say, "Hey, I've got an 8 unit apartment building that I just bought. I want to convert this into short term rental units. And I know you've got some experience in kind of getting it listed on all the platforms and that sort of thing." And so um, I helped him out, helped him get it listed, built a website. A few months go by and he says, "Hey, I've got, there's a couple of cleaners that I have they're really reliable. They want some more work. What if we started a property management company to start doing this, for some other people? Like I've got some free time, I can do this." And I was a little burnt out from doing it in New York City. We had about just over 200 listings in New York, and it was a very lean team. So I was the one answering the midnight calls, and like it was a lot. So I was like, I don't know, man. I'm kind of tired of this. I've got a good job being product manager on the vendor side. Like this is good. Like he's like, no, no, no. I'll do everything. I just need you to do like the technology stuff, set us up on a PMS and like help us get listed and all that. And I said, okay, sure, let's let's do this. Again, thinking that it was going to be he's going to sign a couple of listings and we'll keep it kind of as a small side hustle, good couple $1,000s a month, extra income kind of thing. And then fast forward, not even probably less than a year, and we had hit the 100 unit mark, and I was like, okay, I need to really focus on this business and kind of double in. So resigned from my day job and started paying attention to beachside VR full time, and it's just still been growing like wildfire. We're about 300 units now, and um, now we're really getting to a point of trying to get a little bit more selective with our inventory and start really dialing in and making those profits. So.
I mean, there are a couple of things I want to pull out from there on building a company, selling it to someone else, and then now kind of on your third entrepreneurial journey. But I didn't know you started arbitrage in New York. That's how my wife and I started too.
Oh, really?
Yeah, yeah, 20 in
What?
2016,
Okay,
2016.
so we
This,
were the same times there.
yeah, yeah. So December 27th, 2016. We launched our first arbitrage unit in Queens, New York. My wife, she went to high school there, so we kind of just like knew the area. I was still working in my investment banking job, so we had heard around that this is an interesting opportunity. It wasn't like there was like a ton of data back in the day. We're just like, oh, why don't we just
Right.
give it a shot? We'll see. I mean, this is like a two-bed flex. So it was like 3 bedrooms, 1 bathroom. I was like February. I was like did like 10K in February in Queens. I was like the rent was 2K. I was like, what is this? This is like if someone told me this, I'd be like, you're scamming me because I
Yeah.
just wouldn't believe it. And it's another thing where you see the numbers, you're like, holy crap! And this is like, wait, this is winter. Like, what about summer? My wife Liz, I was like, oh, you should quit your job. She was working at Kate Spade at the time, and I was like, we should quit your job and just like do this full time because this is 5K per unit, 2 to 3 units, and like we replace your job
Right.
and probably a lot less work. She was like traveling, going all, and she didn't like super love it. So I was like, you should just do this. And like fast forward today, like where we are today. Was your inventory in Manhattan or kind of all over?
Yeah. So as
How'd
it
you get
turns
started, by
out,
the way? Like, I would love, like, how'd you, like,
yeah,
how, like,
yeah.
what was the, it was just like, oh, Airbnb, cool. Or like, you hear it over, like, someone get drunk at a party and tell you, or like, what was the
No, so it was
origin story?
I studied hospitality management in college, and so I
Where?
was Florida Gulf Coast University down in
Okay.
Fort Myers, Florida. Um, and they didn't talk anything about short-term rentals like as part of your college degree in hospitality, but I worked, a bunch of different hospitality jobs and didn't really find anything that I loved, that I was excited about. I was like, I guess I could, work at a front desk and whatever, like work my way up. But I wanted something like quicker. And so I was trying to get into like hotel management, like get in with a company to do hotel management on like the corporate level. Nothing panned out. And anyway, my wife and I had moved after we graduated, we moved to New York City. I didn't have a job. I'm like applying like crazy, trying to find something. And I answered a Craigslist ad for somebody to help manage their, like, via co-host. They had 10 units under management, and it ended up the guys I that posted that were trying to grow rapidly, and they were looking for somebody to be kind of that like GM of
Yeah.
their portfolio. And so as soon as they hired me, they started basically signing as many leases as they possibly could. And so
As you,
that's how we
as it
grew so
was,
fast. And so yeah, that's how I got into it, was a Craigslist ad. So yeah.
we overheard, I don't think I ever really talked about this as much, but we didn't know anything about it until we basically overheard someone talking about their business. Well, not overheard, but like they were just talking about their business. They were talking about like arbitrage. We were just like, actually, it was like below my awareness. I didn't even know what Airbnb was. I mean, I'd heard of it. We used it, but like to be a host, I was like, you have to buy a house and do all these things. Like I was working in New York City, like I'm not buying a $2 million condo to like Airbnb. It just was just like completely below my awareness. They talked about a little bit about their business. I looked at my then girlfriend, now wife, Liz. I was like, "So you're hearing this?" She's like, "Yeah." I was like, oh, "This is we gotta dig in on here because like this seems really odd, but like seems really interesting." And then when you get that combination of the two, you're like, "Okay, like let's actually dig in." But then before we move on to kind of like what happened to that portfolio? COVID, I presume,
No, it
or
was
regulations.
regulations for the most
Okay.
part. So just let the leases expire and moved on with our lives to other things.
I've met so many people that were like kind of similarly just kind of doing it in New York before regulations like really changed, and those were like it was the gold age.
Right.
It was so good that you couldn't actually. It's hard to describe because like post COVID actually was really really good too. Like everything post COVID was like awesome too, but that was like even more awesome because of a number of different factors around like competition and like platform and just like the newness of it. And you like could be a lot more creative, I think, with how you like did things. Now it's a little more formulaic. The
Yeah,
tools are kind
I
of
was going to
there.
say it was almost like you couldn't mess up, and like because our
Yes.
portfolio is Manhattan, and a lot in the Lower East Side, and it was just like there was just this built-in demand. Like the only thing that you could do messing up would be underpricing it. Like
Yeah,
otherwise, it was going to get booked no matter what.
no matter what.
Like, and as long as your operations were good enough to where it was like it was cleaned and ready by the time a guest checked in, then
Ish.
yeah,
Because like it
yeah.
just
So
it didn't
it's a
really
lot
matter.
different. Yeah,
Yeah.
it's a
And
lot
guest
different now
expectation.
that it's I think the expectations have changed. It's a lot more mature of an industry than it
Yeah.
used to be. And I mean,
Yeah.
even then, we'd have some people that had somewhat unrealistic expectations. They check in and be like, "Where are my slippers?" It's like, "What are you talking about? Where are your your slippers?" Like,
You're in the Lower East Side.
yeah,
Go to the peninsula on 55th if you really want slippers. Like it's
yeah.
not. What are those guys doing now? Curious.
Um, yeah, so there's both of them are still in the short-term rental space. So yeah, they're still kicking. Not neither one of them are in New York anymore, but yeah, still in the short-term rental space. I keep in contact with them. We still kind of trade some ideas and stuff like that.
And I feel like we're all cut from the same cloth.
Yeah.
I've met a lot of people that even like call it like colleagues in investment banking. There's a person who she wants to be anonymous, so I won't say he or she. When she actually saw the podcast, she was like, "Oh, I didn't know you were doing this." I was like, "Yeah," and she was like, "Well, I was doing it too." I was like, "Really?" And then she's like, "Yeah, I had like 100+ units in Manhattan." I was like, "Really?" I was like, "She's like, why do you think I was such a bad associate?" I was like, "Well, I just thought you were like you didn't care, you were lazy, or you just were dumb." And then it just didn't mess with her. And she was like, "No," like because I was like working on the short-term rental business all the time. And I was like, "Well, if it's only just you, like, why are you still working? Like, you should have made enough money to like retire." She's like, I love the game. Like, okay, fine. It's just always fun to meet the same, all of us that started in New York because it was like it was so good. It was so good.
Yeah.
Like you
Yeah, it's
couldn't. It was
crazy.
hard to mess up. And then as you transitioned to, when were you done with that, and then moved over to kind of the more lead gen business, and then selling it to Mintori and Brooke?
Yeah. Yeah. So I moved out of New York in late 2018, and
Oh,
then
2018. Oh, really? Okay.
yeah. Um,
Okay.
so then I
Why'd you move? I was like, that was like
honestly,
the
it
fun
was
time.
just like, yeah, it was just life decisions. Like
Okay.
we did the
All right.
city, that was fun. Let's settle down somewhere. And so we live in Raleigh, North Carolina now. And
Gotcha.
yeah, we moved here. I worked for a short stint doing um, sales for a hospitality staffing app startup. So think like Uber, but for employees. So
Okay.
if you
Tough.
needed like bartenders for an event or something like that,
Good.
it was a really cool app. But then
Okay.
COVID came, and there was no need for event staffing. So yeah, that's kind of I guess the motivator to start my own business was like, got nothing else going on.
Yeah.
Let's
The
see.
COVID, like kind of April, like March, April of 2020, or like, oh, got to figure something out.
Yeah, exactly. So
Okay. Got it. Okay.
started thinking like, well, what can I do? Like, what are my talents? And um, actually answered a job post from Rabu, which is
Okay.
now they're doing the data stuff, but at the time they
Yeah.
were doing management,
Yeah. PM, yeah.
and it was essentially a commission only role and no leads, and they were like, find us find us deals. So I was like, well, got nothing else to do. Let me try and figure this out. And that was when I started cold calling on Zillow, and I was just setting a ton of appointments. Like it was just crazy. I'd call and people would be like, yeah, sure, that sounds interesting. I was like, wow, that was easy. Call another,
Yeah.
like same response, and Rabu was loving the leads. They're like, where are you getting these people from? Like, this is awesome. And so I kind of realized then that I had
You
something.
didn't tell Amir. I hope you didn't tell Amir, dude, because he'll.
Oh no, they knew about. Yeah, they knew about the
Okay.
whole what I was doing. But anyway, I started doing more of it, and I was like, what if I, instead of calling, started emailing people on Zillow instead, see if like the conversion rate changes at all. And there was still pretty good conversion rate. And so then I worked with a developer to build out an automation to be able to just send messages to new people every day on Zillow.
So you
And
spam Zillow.
so,
So you spam Zillow's
yeah. Oh, yeah.
API.
It was a spam.
Nice.
It was a little bit of a spam thing, but I mean, you could set some filters and criteria. So like you weren't sending the same people messages and like sending like certain filters, so it's not like in your price range and stuff like that. But yeah, so I mean, that was essentially it. Was it started with
Nice.
Rabu and then realized this could work in any market, not just in the markets that they were in. So
Yeah.
yeah.
Nice. And then what was the impetus to sell
It's
to
it's the business model that I had created with that was it, it was a great risk reversal, but it was essentially you pay me for the small amount for the meeting that I set for you, and then a larger amount on success, like once you close it. And then actually, once you have, I had probably like 20, 30 clients and trying to keep track of like the deals after I set the meeting
uh
and then
yeah.
following back up and being like, "Hey, did you close this?" And they're like, no, it didn't work out X, Y, and Z. And it's like,
Yeah.
was that
Yeah.
person a bad salesperson? Are they lying about closing it? Did they
Yep.
even like follow up? So it was like there was a lot of potentially missed revenue that I had there of like I sent plenty of leads, but then I never knew if they closed. And so I wasn't actually making a lot of money. I had talked to Brooke at Ventori, kind of multiple times throughout because he was like, "Who is this guy? Like he's everywhere. Why? He's kind of stepping on my inventory
Yeah.
acquisition claims. Like what's going on?" So he was talking to me kind of throughout the whole thing. Yeah, and then one day it was just
Who's this
like
young guy?
he's
Who's this
like,
young guy stepping on my toes?
yeah, exactly. He's just like, hey, what if you came and joined Ventori and we just bought your software? And I was like, that might be a good gig.
Yeah.
So yeah, it turned out we closed the deal and it turned out great. I was at Ventori for almost 3 years and
Oh wow. Okay.
yeah, got to work. It was amazing because I got to talk to other property managers like
Yeah.
across the country and kind of
Yeah.
realize what they were doing, learn from them and network as
What do
well.
what do you think is the biggest problem? Because like, okay, so people that are listening here, I think most people are like, trying to buy their first property. They're trying to figure out if they need to manage it themselves or like hire, someone like, Beachside or another property manager to do it for them. Because you've been on these conversations like from both sides, really, right? What are some of the common pain points and like when is someone actually better suited for just trying to figure out themselves versus hiring someone and paying the 15-25%?
I honestly think it's like a time thing, right?
Mhm.
Depends on how much time you want to put into it because you could argue that the amount of time that you're putting into it and like trying to learn all of the stuff, you might be better off just paying somebody to do it. But if you actually have a genuine interest and you want to scale and say you're trying to buy your first one, but you actually have intentions to have like 10 down the road,
Yeah,
then like maybe you start trying to learn with that first one. Or, like probably property managers aren't going to want me to say this, but like hire a property manager, figure out from them, right? Like learn what they're doing and then like take it back and do it yourself
yeah,
later. That's also not a terrible option.
yeah.
Um, but yeah, I think it's totally a time thing of it's not like I really dislike the kind of guru mentality of like, oh, yeah, just buy a property, put it on Airbnb, and you're good to go. Because it's like there's a lot of stuff that
A
comes up
lot.
between here and there, and there's a lot of mistakes that can happen, whether it's like pricing or like not setting your nightly minimums right or whatever it is. There's all kinds of
Buy the
stuff that
right. I mean, honestly, just find. I mean, I think it comes.
true. Yeah.
I agree, no, I agree with all that. I think, but like I, kind of go further upstream. You just buy the wrong property. Like
Yeah.
then sometimes it doesn't matter. You buy the right property, you just your margin error is a lot higher. Like maybe you're not like a super good. You weren't super good on your pricing or your listing or your design, but like good enough. But then you're in a good enough market that like kind of washes away those sins. But if you're in a bad market, if you bought in like Austin 2024, like I don't care what you did. Like there's no way, like there's no way you're gonna fight against those headwinds of like overpaying and your mortgage being like X or your rent being Y. Like it doesn't matter kind of what you did. It's the market, the downdraft in the market, there's just no way to kind of outswim that current. And so I think it's a very kind of personal decision. It's like I think time and also just like you have I think curiosity, but also like do you have like technological curiosity? Like you kind of have to like learn how to fumble around a little bit and like
Right. Do you like want to learn all these different apps and that kind of stuff? Yeah.
Do you find like is it interesting? Like, do you like tinkering around with stuff? Because like there is a lot of tinkering. It's kind of like
Oh
AI right
yeah.
now too. It's a lot of tinkering because it keeps changing. What worked 2 months ago, like is not going to work now. So you kind of just like keep playing around with it, and it's a little bit of short-term rental technology. You just kind of have to like your pricing. There's concepts and strategies, but like every market property are different. You have to kind of just do it enough where you kind of get the feel of it. But I think to your point though, if you're listening right now, it's like, do you have the time and desire to do this? If you have both, then you really should learn how to do it because I think it's a great business. But if it's not, then, property manager is probably a really good, first step. At least just to get started, find a right property manager. There are a lot of bad ones out there, to be fair, too. Find a good one that will, not want that you won't want to leave.
Right.
I
Yeah.
think it's that too, right? If someone's so good, you probably don't really want them to leave. What makes a bad client? Like what makes like as you say, you kind of like now be more selective in inventory because I think people are interested in co-hosting and so that kind of stuff now too. Just given if you want to build this to a more cash flow business, like what type of inventory should people? When you're starting, is there inventory you should try to avoid, or you just take everything in order to get started? And how does that mindset shift as
Yeah, I
you
mean, I
grow?
think it depends on like how focused your vision for what you're trying to build is, right? Like if you start out and you're like, I'm only doing luxury stuff, and you can actually start signing luxury properties right off the bat, and that's all you want to do, then yeah, I mean, by all means. But for us, it was, we're two 20 something year old guys trying to convince people to let us manage their properties. It's like whoever would give us the opportunity, we would say yes to it in the beginning because we just had to have some sort of credibility to show like, hey, we manage this property over here and this property, and look at all of our reviews here and that sort of thing. Starting out, it's almost more of just trying to get that credibility. So, I obviously, like, if you could be selective in the beginning, great, do it. But it's harder to do that, especially when you're trying to make money and make it
Yeah.
get to economies of scale, which is something we can touch on in a second. But I'd say, you asked what makes a bad client. Somebody that you want to avoid is like if you start getting kind of like weird feelings, even in the sales part of it, of they're trying to like redline your contract, they're trying to get you to do things that you don't normally do that are outside of scope.
Yeah.
Those are probably times when you should just like cut your losses. We actually, I think our very first potential client, we were going back and forth with the contract and they were trying to get us to do all these things that like weren't something that we were planning on doing as part of the management. And we ended up just saying, this isn't for us. So we actually turned down our very first management agreement client, which was at the time seemed like this huge deal. Like, oh my God, I can't believe we're missing out on this nice house and all of that. But I think and ultimately, it's probably overplayed about talking about the 80-20 rule, but it is just such a true thing
It's
of
such true though.
the 20% of your problems are going to come, or 80% of your problems are going to come from 20% of the people.
And
And
well, and also
like,
vice versa. Like 20% of your profit, 20% of profits generate 80% of the profits too.
yeah, true. Yeah.
It
So,
really is. That Pareto,
yeah, that's,
that Pareto rule is like so key, so key. No, that's and I think that's actually I think you pull like a different like another lesson from that too is like it's okay to walk away from a deal if you like whether you're buying your arbitrage, whether you're buying a property or you're like doing rental arbitrage and like you have that lease that you've been looking for a lease and you finally got someone to say yes. The desire to get started should not be outweighed by does it actually make sense from a dollar and cents perspective and your long-term goals, right? I think a lot of people lose sight of that and they just get stuck in a morass in the beginning and then like they can't break out and they quit and they go to somewhere else, right? So if you're listening, I think that's another kind of key lesson. If you're buying a property and like it's exactly what you're looking for and you're trying to force it, I always tell people like, just keep looking, just keep looking, right? It's like a relationship, right? Like you meet someone and like, yeah, like, like you like them, but it's like not for, I feel like you're making a big decision here. You're going to try to get as close to like what you want versus settling because you don't think you get something better. That's my point of view. And now you're 300 though, right? Like, how'd you, walk us through from that first deal that you said no to and now 300?
we've got quite a few of like multi-unit inventory type of things, right? Where it's like a 8 unit complex here, a 10 unit complex there. So that helped us kind of scale quicker than just ones and twos. I think most of our owners have at least 2 properties, if not, 15, 20 properties. So that's been great working with investors. And the way we've gotten a lot of those is through realtor referrals. Early on, my business partner, Riley, would go to real estate brokerages and hold lunch and learns, or, breakfast, breakfast and learn, whatever, but bring a box of donuts or some public subs or something, and then just kind of answer questions on the short-term rental market. And what we found is realtors just love to have somebody that they can refer to and actually
Yeah.
kind of trust. And so, we get the question a lot of like, oh, what do you, what incentives do you give? And like, we started out saying that we were going to give a percentage of revenue, but at the end of the day, like, if they're selling a house, they don't really care about that. Like, helping them sell the house is what they like really care about. And so we say, any projections that you guys need, send them over, we'll do them. So we're always doing projections, pro formas, whatever you want to call them, for listings. And that, I think, is probably our biggest growth driver. And then we've just had a couple of like really right place, right time kind of deals that happen as well, where we've got 2 condo hotels that we manage, the majority of the units at those condo hotels. And they've just been, one of them, the previous company went out of business and we were the only other manager there. So we're like, hey, here we are. And then the other one just, kind of happened with an intro, right? So one of them is 90 units and one of them is, I believe, 75 units.
So
So
half your inventory are these 2
about half of
buildings.
our
So
inventory is those 2.
yeah. So I mean, you basically manage 2 hotels, basically.
Yeah,
In a
and
way,
and I
in a
think
way.
the
Yeah.
hotel space is very interesting and something that we're definitely kind of looking at as well. Of how could we take, we're basically, like you said, basically already managing hotels. How can we take our current systems and apply this to other, like small motels and stuff like that? Can it make sense financially to do that?
Hey guys, I hope you're enjoying the episode so far. If you can think about how you found this podcast, maybe it was on TikTok or Instagram, or maybe someone shared it with you. I don't run ads for the show or have any sponsorships. So the only way this grows is through word of mouth. If my podcast is valuable for you in any way, please hit the subscribe button and share this with someone who you think would help their investing journey or business. Thanks a lot, and let's continue on with the episode.
Or the other way too is like find a developer that is doing these, 7,500 unit type condo hotels. And for them, it's like, you just kind of go upstream instead of like working with the brokers that are selling these things, work with a developer. They're like, hey, this is what, and it's all kind of all in one, like own a condo overlooking the beach. We have these people that do this for the 2 properties nearby. And then this is like, you can own a property for free, basically. You can own a property and someone else will pay your mortgage, or you might, be down a little bit. It's like, and then, instead of 75 heads that you're hunting after, it's
Right.
one.
Oh yeah. I mean, that's probably the hardest part about condo hotels, right? Is that it's a bunch of different owners that, that own those units, but you're kind of advertising it as one hotel, and so it is a bit of a little bit more tricky than a traditional hotel where it's one owner and 70 units or something. But
Sure. That's your secret. That's your secret sauce. That's your secret sauce. That's cool. That's awesome. It's really fun. I mean, it's a little bit like my rental arbitrage strategy where we will rent in multifamily. So, we have 2 main properties we work with in Philadelphia where, we have, a decent number of their units in the building. We pay the rent, we manage them. So obviously different, but there's a lot more economies of scale there. Managing 30 properties scattered site throughout the city of Philadelphia is not, one, it's just not a business I'm going to be involved in because it's just too much work for the amount of money you'd make. So you do want some scale advantages. And I was going to counsel people as you look to scale these portfolios, like pick a market, pick a sub-market, just like get really good at one place. I think there's just like false diversification where like, oh, I got to be in all these different markets. And I think it's incorrect because if you aren't deep in one thing, like you're spread super thin across 3 markets or 10 properties, like you're just not going to be as good. And like you might be diversified across geographies, but your business risk is like so high because that cleaner there is not really going to do a great job for you. And we have a few over there with them. Like you don't know all the little kinks of each individual property that like ultimately is going to allow you to run that for years and really make money on it. So are you geographically constrained just in this space? Or maybe tell us like where you're like kind of the bulk of the areas you serve. I know kind of Space Coast, I know from,
Yeah,
but like
yeah, we call it
what
Space
geography?
Coast. It's primarily Cocoa Beach, Florida.
Okay.
But then there's Merritt Island, which is just inland of Cocoa Beach, and then south we've got like Satellite Beach, Melbourne Beach, that sort of thing. And north we've got Cape Canaveral. So
Okay.
it's all kind of within the same, call it like 30-mile radius, I'd say. But yeah, I am a big proponent of what you just said, of like really dialing in and focusing on one market, and then you can build economies of scale in that one market. You can have in-house cleaners, in-house maintenance people, in-house laundry. Like as you keep growing and doing more of that, then you can start building things that allow you to get a better profit margin and like reduce your risk.
Yeah, exactly. And if you ultimately reduce your risk, like the leads coming easier, you actually really understand your market. Your pricing gets better too, because you're really focused on that one market, the ebbs and flows of it. You catch things kind of quicker. There's a lot of, so there's, if you're listening, there's one thing that you take away from this. Just find, do the work, find a good market, and then just like grow in that market until it doesn't make sense to. We have six. So, our portfolio, we have, 30 that are in Philadelphia, those, kind of two buildings. They're all in one place. And we own six in the Smokies in Tennessee, started by in 2020. Three of them are in the same HOA. And then the other three are like fairly close by. Same cleaner, same maintenance people, same everything, same pricing. And then we just bought one in the Catskills up in New York, just as the new market. And we're like around, I think we just closed. Actually, we closed on a year ago today. I didn't realize that actually. We closed on our 1 year anniversary of owning property. We actually paid off. So we financed we have a mortgage on it, but we financed the build out with like 0% business credit cards. This billing cycle was the last day, so we finally paid it all off. So it actually feels good to. I've never carried a balance in my entire life except like this. So that we could pay it off, but I was like, 0% credit. Let's like kind of liquidity, whatever. I find I actually don't really like it. Like it just like bothers me to have.
Right, just in the back of your head, like
Yeah, it's like I know, it's
don't
like
forget to pay this off.
yeah, exactly. Because the mortgage is like it's fine, like I get that, but like mortgage at like 5% is 30 years is very different from like a 1 year credit card that will like reset to like 27% if I like forget to do it. So it was always in the back of my head, but it felt really nice yesterday. And like I showed my wife, I was like, hey, you can press the button. And then we made that final payment and we finally got to zero. It's like, okay, we paid the 120 off, which is a really nice feeling. But, you and I were talking about buying properties, with say the real estate market, right? Like inventory highest it's been in a long time. Like, there's some metric out there, like it doesn't matter. Like there's a lot of inventory out there. There are fewer buyers. There is high interest rates are still relatively high, right? They're like call it 6.5%, 7%. A lot of inventory. Economy is like people have differing views on where we're going to go with the tariffs and this immigration stuff in LA and just everything, right? So a lot of uncertainty. I kind of put that in a backdrop of like, that's the here and now. And there's a lot of reasons why not to do it. If you feel like you're going to lose your job or like you don't feel financially secure, you're probably like not the right place to make a big investment. But on the flip side, everyone in 2020 that was like, man, once this market slows down a little bit, I'm going to buy. There's like this house that has like 100 offers on there. Now's the time, right? Like, things slow down when things aren't looking as great. That's just the nature of it, right? And no one can pick exactly when the bottom is, but like just in whatever your situation is, if you are making money, you feel confident in your job, or your spouse is making money, confident in your job, you have a big tax liability, you want to own real estate because long-term appreciation, and this thing actually cash flows versus a long-term rental. Like that's when I tell people like, hey, now is the time to buy. And if you don't want to manage it yourself, like Beachside VR, if you're in a Space Coast or other good, property management companies, can do that for you. So before we came on, it was like the bonus depreciation. If that goes through in the next 3 weeks, there's talks of it actually being permanent versus sunsetting it. Before it was like a 5-year sunset, it would reduce every single year. There's a senator in Wyoming that's saying that like, I'm not going to vote unless this is permanent. If they're permanent, like they're pouring gas on the short-term rental market because the tax advantages are going to be so meaningful. So I don't mean to like be long-winded about it, but now there's less competition. There's great deals in the market in Florida, especially. Like we're looking down there because like things are like 20% off now for lists. Things have come down Fair. What are you seeing on the, I guess maybe give a sense of like your market. Like how's it look 24, 25? Like what's your state of the union on the Florida Space Coast market?
Both rental demand and revenue are right steady or with where they have been the past couple of years. But like to your point, the mortgage rates are up. So we've got, a couple newer investors that are coming in that are buying things maybe based on higher projections than what are actuals. And, so that ends up with some people thinking that it's not as good as it is. But, really, I think it's, like you said, it's making sure that you can cash flow based on realistic projections. And I think or having the people that are purchasing places of being a second home for them. And like you had mentioned earlier, if you could live, come down a couple weeks out of the year and basically it be for free, somebody else paying your mortgage, then that's a good deal. But I think,
I do.
there are some, I think the deals where you're going to be printing money, at least in our market, are not there currently. And I think, either interest rates have to come down or something drastic has to happen. We all are also our, Cocoa Beach, Space Coast area is kind of booming right now. So as a larger zooming out, Port Canaveral is the number one cruise port in the country in terms of volume. So it's like there's a ton of travel coming into the Space Coast because of the port. Everybody comes in for a cruise, so they'll stay a night or two or tack on a weekend after the cruise. So travel demand's kind of like through the roof right now because of the cruise plus the space industry stuff going on. SpaceX has, I think I saw something where they're proposing doing like 600 launches next year, where I don't know if that's
At
actually
the
going
Cape?
to happen,
At
but
Canaveral?
yeah, out of Port
Oh,
Canaveral,
wow.
which, I mean, if that happens, that would be 2 launches a day. So I don't know if they're actually going to be able to get up to that many, but as it is right now, there's a couple a week happening. So there's a lot of space tourism happening too.
Oh, I didn't
Yeah.
I didn't hear about that. Yeah.
Yeah.
That's
So
cool.
it's,
No, that's really
it's
cool.
like there's a ton of rental demand. So that's great, but it's just given the price of real estate as well, it's kind of making it where it's like you still have to shift those expectations a bit.
Is the wind risk there as high as like Tampa, Sarasota, that kind of part of Miami? Does that part of the Northeast Florida get a lot of wind?
Like hurricanes and stuff.
Yeah, yeah.
Yeah, I mean, I think you're going to have that risk anywhere in any coastal place, honestly. I know insurance is getting crazy. I was actually just talking to my partner about that.
I've seen 4 bedrooms like the rent the with wind it's like 30K a year in
Mhm.
insurance. It's not that it's just 30K. You don't know what actually will be next year. I've seen these deals and it's like, okay, it makes sense. And then you call the insurance people and they're like 30K. I was like, okay, well, like what was the last year? It was like 18. It's like, holy shit. So I mean, so wait, next year it could be a 48 and next year it could be a 58. Like we're like, and they're like, well, we don't know. Like you might be lucky to get you might be able to get lucky to get coverage at 58 next year. They might not. There might be no carriers. You might have to go to the state plan.
I mean, my partner and I were just having this discussion, and I think there's going to be a lot of talks of self-insuring for some of that, right? Like just taking a look at the risk and being like, if I have to pay 30,000 a year for wind insurance, like why not just roll the dice and like hope that in the next
Because
10 years
your mortgage company will make you. Because your mortgage
well,
company,
yeah, depending on if you have a mortgage or on it, but that was something that I think, if you own the property outright, that you might consider not insuring or self-insuring, but that might be bad advice. Who knows? But
go naked. I mean,
but
that's the
yeah, and then
term
talking about the
actually.
condos too. I mean, that's a whole nother thing with the condos getting lots of them are getting big assessments now because they're going through and redoing all the rebar and that sort of thing. So it's a hard market to make money in. That's why your point about maybe having a vacation home that that you could live in for free a couple of weeks out of the year is a better perspective to have. I know that there's definitely still some markets that are making money in terms of investments, but I don't know necessarily if I'd tell all of your listeners to flock to Cocoa Beach to buy to buy a rental in order to cash flow. I don't know if that's necessarily good advice.
It's all deal dependent, right? If someone is selling a condo for like 50% below the list, right, it probably will work. I always kind of say like every property can be profitable. If you paid $1 for it, like almost anything will be profitable. Like it'd be hard to like not make money. Most likely will be unprofitable. Just thinking like bookending 2 edge cases, like it just I think what you pay for something is actually like really critical. And people will kind of forget that, like, oh, what great market or property. It's like actually like what you pay is as important as these things. You overpay.
Right.
There's these two, the two truths in real estate, right? Like your basis never changes. Like what you paid for it never changes. And where it is generally never changes, right? If you get those two things right, like everything else will probably generally work out. If you get one of those wrong, then, can really kind of bite you in the butt for a very long time. I mean, there definitely are places that still make money, but to your point, like it's not like, I think people's expectations have to come down. And, I think we really preach this is like, it's not what it was in 2020, 2021. Like this isn't a money printing machine. This is a wealth building machine, right? Like,
Right.
and it's better than long-term rentals because it does actually cash flow versus long-term rentals that like don't really cash flow, to be fair. Like that one AC blows out and 5 years of your quote unquote cash flow just like went out the door. And then with the short-term rental tax loophole, like that is real. Like that is saving a lot of money in taxes year one, right? So those are the good things about short-term real estate. The negative things are like, it's harder to manage these things. Like it's not just find one person, one family, and then you kind of like collect your checks and you don't really think about it. You have like 600 groups coming in every single month if you're doing it right. And that's a lot of like operational complexity, right? So like there's no free lunch. You gotta learn it to do yourself or hire a firm like Beachside and JJ and his team to do it for you. And it depends on your time and your ability to assimilate technology quickly. Thanks for taking the time today. It was good to actually chat with you. And I think this is just kind of like it's good to just talk to a fellow investor and operator, right? Like a lot of these podcasts are, even some of our episodes are a little more, CEOs of big firms or big investors. But I think all of us that, we're starting out, we're like kind of in the first quarter of our journey. It's good to hear how someone started. Like, and it's not a straight line. There's always like these little detours. There's these little things that kind of like open up the aperture. And it's kind of cool to hear, Craigslist, New York, and then just like the random like Zillow listings, and then now like building a 300 unit vacation rental company. And as you kind of look back, and as we close off the episode, as you look back at your journey, I'll ask my kind of traditional closing question: like, what was one of the kindest things that someone did for you that helps you get to where you are today with your business?
Gosh, just kind of thinking right off the bat, I will say somebody in the industry when I launched VRM Leads, the lead generation company. I was not really plugged into, the vacation rental, short-term rental industry. Because I was doing stuff in New York, so I was flying under the radar, right? I didn't want people knowing what I was doing. But I had started getting plugged in, and somebody reached out to me and just was like, "Hey, I want to see what you're doing. Want to see your product." Gave me some tips on how to position the product in the market, gave me some introductions and that sort of thing. And I think like that made such a huge difference just in like morale of like starting out, and then also moving forward, knowing like the advice that he gave me was like super solid. And I'm still taking the time to talk to somebody and give somebody advice is amazing. I think that was probably the nicest thing and that could have happened. It's just somebody like taking their time to be like, "Hey, here's what I think you should do," and that sort of thing.
There's a person that did this really kind thing for you. That's shout out to them. And there's so many ways to impact people along kind of what you do, and just being kind to someone with your time and your expertise without an expectation of return is really sometimes really the kindest thing that you can do with someone. Just like believing in them, taking the time to show that, hey, it's cool. Like I like what you're doing. Like I just like, let me try to be helpful. So that's really cool. That's great. Well, shout out to your friend there. If folks want to, listen to this and, they have a property in Space Coast or just, want to connect with you, what's the best way for folks to reach out to you?
Yeah. So my email is jj@beachsidevr.com, or you can find me on LinkedIn. I'm pretty active there as well. Just JJ King.
We'll put a link to JJ's LinkedIn profile in the show notes. So, follow him and connect with him on LinkedIn. Hey, JJ, thanks very much for your time. I appreciate it. Good to meet you.
Thanks, Michael. Yep.
If you found this episode valuable, please make sure you hit the subscribe button so you can get notified when I put out new content on Airbnb investing. And if you want to learn about how to work with me more directly, I have links below on my description. Click on those and let's figure out how I can help you with your Airbnb investing journey.